What is up, guys? It's Andy here. Welcome back to another episode of the Andy Kandola Show. So today I'm going to go ahead and share with you guys a full update on my portfolio. And yes, I finally hit 25,000 in my portfolio. So it's a big achievement for me. I am very excited to share that with you guys. So I'm going to run through my full portfolio. I've had a bunch of changes that I've had to make in my portfolio since I started this portfolio. I'll go through all my sectors, all my stocks, and also share with you guys my full strategy on why I decided to go with this type of portfolio and my strategy around dividend investing. So let's go ahead and jump right into it. So in regards to my portfolio, the focus on this portfolio has been to only invest in dividend stocks. Now I'm trying to build another source of passive income, and at the same time, because there's so much fluctuation in the market, I'm not looking at the price of the market going up or down on any given day. Like today, for example, the market is down 93 points, or the Dow Jones is down 93 points. But to me, it doesn't matter if the market goes up or down because I'm primarily only focused on dividend stocks. And these stocks have to pay me every single month or every single quarter. So I'm earning another source of passive income. Now, my strategy with this portfolio is long term. So I'm looking at holding this portfolio for the next 20 to 30 years and just slowly keep on building this portfolio and keep investing in this, and eventually just build that passive income funnel where I can retire early, or I can just use that money and even compound more of that, and basically with the power of compound interest make more money off of that money. Now additionally, I'm looking for stocks to pay me a dividend in this portfolio between 2 to 6%. So if a stock is not paying me at least a 2% dividend, it better be a great growth stock that I can see the price of that stock go up over a period of time, because growth does matter. However, because I'm so focused on dividends as well, I'm looking for a good balance there of growth and dividends. But if a stock is not going to grow and it doesn't have a high yield dividend, it's not being added to my portfolio. Now altogether, I have about 67 stocks currently in my portfolio, and I'll go ahead and run through that with you guys. Now, it can seem like that's a lot of stocks to own in one portfolio, and why not just go with an index fund? Personally, I love the idea of investing myself, doing all the research, investing in stocks that I believe in personally, that I believe it's a long-term investment, and it just feels better just to know that you own a part of a company. I'm a part owner in all these 67 companies, so when I see one of these companies or I buy a certain product from one of these companies, it just feels better internally. So I like the idea of building my own portfolio as opposed to going with like an index fund. Now additionally, my portfolio is broken up into 11 different sectors. So I'm going to run through all these sectors and all the stocks in all these sectors basically. And also go through, I have 9 trades that I'm looking at making today. So I'll run through that as well. And lastly, I do want to say that I focus on 2 different types of stocks that I currently have in my portfolio. One is dividend aristocrats, and second are dividend kings. Now, if you're not familiar with dividend aristocrats or dividend kings, dividend aristocrats are stocks that have been consistently paying a dividend and growing their dividends for the last 25 years. And dividend kings is the same exact thing, but those stocks have been growing for the last 50 years and have been paying their dividends for the last 50 years. Now, here's the thing. If one of those stocks cuts their dividends, that's a big red alert, meaning that get out of that stock immediately. And that's really what I've been focused on, is if one of these stocks cut their dividends, I have to stick with my strategy and I have to cut it out of my portfolio. So I have been true to staying with that strategy and staying with that principle because, again, I am focused on only dividend stocks in this portfolio. Now, not to say that growth stocks are bad, because I do have growth stocks in my Roth IRA account, but because this is primarily focused on dividends and a passive income, I'm only sticking with that strategy for this portfolio. Alright, so now I'm going to go ahead and jump into the portfolio here, and let me go ahead and share with you guys the trades first. Now, I'm looking at making 9 trades this morning. So the trades that I have that are going to be going through today are going to be these 9 stocks. Now, I'm investing a total of $450 today in this portfolio, and I'll just quickly run through these stocks. These are going to be primarily stocks that pay out a higher dividend. Now, I'm focused on stocks that are paying out a higher dividend currently because the stock market for the last week or so has been going up. I'm trying to take advantage of the higher yield stocks at this point. So the stocks that I'm currently currently buying is PPL Corporation, which is basically a utility company that has gas and electric utilities. Realty Income Corporation is my favorite REIT. They're basically a commercial REIT that has commercial tenants. AT&T and Verizon are the two stocks that I personally like that do have higher dividends in the communication sector, and they're basically the two largest companies within communication. Maine is a business development company. Basically, they focused on lending to mid-cap and large cap companies, and they either have part ownership on those companies or they lend them out as a loan and they get paid back on interest. Abbey is one of the healthcare providers that I like. They have a drug that's called Humira, and they're also in the acquisition and merger with another company as well. And then Apple, of course, we all know Apple. I don't think I need to explain Apple any further. And then Costco. Costco is actually a new stock that I've recently added in my portfolio. Now, Costco has been kind of reaching new highs at this point, and the stock price has gone down in the last week. So to me, it's not a bad time to start investing in this company because I believe in their long-term strategy. And then lastly, I have Altria Group, which is paying right around a 7 to 8% interest rate. But because they have so much cash flow and they have so much cash reserve, I do believe that this company is not going to be cutting its dividend anytime soon, and they are a dividend king. And this company has actually recently announced that they are looking at keeping their dividends. So that's why I'm investing in this company, is because of the high yield. Now, in case they do decide to cut their dividend, I'll have to evaluate this company down the road. But now that's just the stocks that I'm buying today that I just wanted to run through. And then additionally, let's go ahead and run through my portfolio. Now, my portfolio, I call it my bucket list portfolio, and that's because this is a long-term 30-year plan here. Now, as far as my portfolio, the total value in my portfolio just recently hit $25,468. Now, all time, I am up $1,370 in this portfolio, and the total earned dividends in this portfolio are $73.53. Now, if we just look at the last month, for the last month, I am up $1,193 in this portfolio, or 7%, and my earned dividends is $71 as well. If we look at the last week, I'm up $966, and if we look at the last day, I am actually up $5.02. So the market has been going up for the last week or so, and that's why the last week shows such a higher profit. But in regards to the overall fluctuation in the market, I'm not as concerned. Now, the way I like to track my dividends is I did create a dividend tracker sheet, and I do have this in my Patreon account. If you're interested in signing up, I do have a link for that down in the description. But basically, within this dividend tracker sheet, I have all my dividends that I'm putting in here. So this is actually going to be tracking all my dividends. But once I go over to the right side, I have my dividends as far as how much I'm getting paid in dividends in this tracker, and basically on an annual basis it's showing that I am making $554 in dividends. So it's a nice way to track your dividends on a weekly, monthly, or daily basis. Now, this sheet has been really helpful because I can also look at my summary, I can look at my sector charts, so it does tell me how much I'm weighed in each sector, so I can make sure that I'm diversified within all my sectors. Plus, I'm able to track all my dividend income as well. But now let's go ahead and jump back into my portfolio. Now, I do use M1 Finance because I believe M1 Finance is one of the best apps to use as far as when it comes down to dividend investing. Now, if you're looking at growth stocks and growth investing, I personally do recommend Robinhood or maybe Webull as one of those platforms for growth stocks, because you can do live trades as opposed to with M1 Finance where you can only trade during the 2 open windows every single day. But just jumping into the sectors, we're going to go ahead and start with the technology sector. Now, this is the sector that I primarily focus on because with technology, even with any kind of pandemic and with the current virus going on, I believe this sector to be the safest. So I do weigh heavily more on the sector. But within the technology sector, the stocks that I have are Apple, Microsoft, Visa, Texas Instrument, and Nvidia. Now, I do have a higher weight on Apple, Microsoft, and Visa because long term I see the potential for these stocks to go higher and higher. But with Texas Instrument and Nvidia, they're also growth stocks as well. So this sector in the last 10 years has probably grown the most out of any sector because technology at the end of the day is something that we're all using, and technology is just moving at such a higher pace. So that's going to be a summary of my technology sector. Now let's go ahead and jump into the next sector. But before I do that, in regards to the top three sectors that I like to focus on is going to be technology, financials, and real estate. So as you can tell, I've weighed more heavily on these three sectors, where technology takes up 16% of my portfolio, financials takes up 15%, and real estate takes up 14%. But now let's go ahead and jump into financials. So within the financial sector, I do have a bunch of different companies, and just for the sake of time, I'm not going to run through every single company here, but I will mention every single one. I do have Main Street Capital, which I previously went over earlier in the video. Then I have Bank of Nova Scotia, Aflac, TD Bank, Bank of Montreal, Sun Life Financial, M&T Bank, Goldman Sachs, American Express, CIBC Bank, JP Morgan Chase, T. Rowe Price Group, Moody's Corporation, and Bank of America. Now, if we just look at these banks, I primarily focus on high yield banks, but I have it diversified in Canadian banks and US banks. Now, to me, Canadian banks and the Canadian banking sector is probably one of the safest banking sectors in the world. And they're actually considered the safest banking or financial sector in the world. That's because even during the 2008 financial crisis, when the US economy and the US financial stocks went down and got hit really hard, the Canadian banks did not cut their dividends and they did not take a hit at all during that same crisis. So I personally do like the Canadian banks just from the safety perspective. And if we just look at one of these Canadian banks, if I just pull up CIBC, they all pay out a higher dividend. Now with CIBC, they're paying out a dividend of 6.47%. So that's another reason that I personally do like Canadian financial banks as well. And overall, the sector has been profitable for me so far by 14%. So I do like this sector. Now let's go ahead and jump into the next sector, which is going to be real estate. Now the nice thing with real estate is going to be these companies actually have to give back to its shareholders 90% of the net earnings. So 90% of the net profits these companies make, because they're considered real estate investment trust or REITs, they have to give back 90% of their net earnings to its shareholders in a form of a dividend. So these stocks usually tend to pay a higher dividend. Now within real estate, I have these stocks here, which include Realty Income Corporation, Federal Realty Investment Trust, Public Storage, Digital Realty Trust, Prologis, and Crown Castle International. So I do like these companies overall within my real estate sector. But now let's go ahead and jump into the next sector, which is going to be communication services. So within the communication services, I have a couple companies here, and these are basically the companies that I truly believe in long term for their growth potential. And communication services, these companies actually do pay out some of the higher dividends as well. But the top two companies that I like is AT&T and Verizon. Now these are both on a larger scale the main competitors when it comes down to communication and when it comes down to any kind of cell phone providers. I personally have AT&T as my provider, but Verizon and AT&T are basically neck to neck, and they both do pay out a little bit higher of a dividend. For example, with AT&T, they pay a dividend of 6.63%. Additionally, I like TELUS Communication as well. TELUS Communication is one of the largest providers in Canada, so I do like them, and I like their overall strategy and their growth, and personally their branding is very solid as well. And then Comcast Corporation is personally another one that's growing pretty aggressively that I do like. But that's going to be it for the communication sector, guys. Now next, let's go ahead and jump into utilities. Now utilities is another safe sector to me, as far as if we see another kind of recession, if we see the market fall, people still have to pay their utilities. You got to pay your bills, keep your lights on, keep your gas on. So it just makes sense to invest in this sector. And utilities usually pays a higher dividend, but they're not as much of a growth stock company. But I do like investing in the utility sector. And within utilities, I have some of the major companies that basically own majority shares as far as when it comes down to market dominance. So the companies that I have is Dominion Energy, Duke Energy, NextEra Energy, PPL Corporation, Southern Company, AQN, and then SJW Group. Dominion Energy is actually one of the largest companies when it comes down to gas and electric energy. So is Duke Energy. And basically, if I look at all these companies, Dominion, Duke Energy, PPL Corporation, Southern Company, and AQN are all primarily focused around gas and electric utilities. Now, these companies are all over the US, and actually AQN is in Canada, and they're actually one of the fastest growing utility companies companies in Canada. And personally, why I'm investing in PPL right now is because they have the highest dividend that they're currently paying. So I see this company going nowhere anytime soon, and currently they're paying a dividend of 6.18%. So as you can tell, I am focused around dividend growth right now, while I see the market is a little bit higher, or it's going higher, I should say. And then NextEra Energy is one of the long-term strategy companies that I'm focused on, because this company is actually the world leader when it comes down to solar energy and wind energy. And then lastly, SJW is within the water utilities, so they're one of the major companies when it comes down to water utilities. So this is going to be all the companies that I have in my portfolio that basically pay me whenever we pay our utilities. Now let's just go ahead and jump into the next stock here, and the next sector is gonna be within the healthcare division. Now within healthcare, I have 4 major companies that I invest in, and I truly believe in every single one of these companies as far as their long-term strategy, and these companies are just well-known names at this point. So the first one's going to be Johnson & Johnson, then I got Abbey, then I got Medtronic, and then I got Merck & Co. Now these companies are all very, very solid companies, and they're basically the largest companies when it comes down to the healthcare sector. But that's basically going to be everything in regards to my healthcare sector. Now next, let's go ahead and jump into consumer staples. So now with consumer staples, this is another sector that I see potential for growth as well down the road. I have a couple different stocks within this sector, or I should say I have like 10 stocks in this sector, but some of the stocks I have is Coke, Pepsi, Cisco, Hormel Foods, ADM, Kimberly-Clark, Procter & Gamble, Clorox, Costco, and Altria Group. Now all these stocks I do believe in, either for the growth potential that they have or for the safety and the dividend that they carry with them. So these are companies that I'm planning to basically hold for the long term. I'm not going to run too much into this because again, I don't want to make this video too long, but these are basically going to be household names and household products that we all use on an everyday basis. And as long as humanity is still alive, I believe that all these stocks are going to be going nowhere anytime soon. So this is going to be all the stocks, guys, that I have within my consumer staples sector. But next, let's just go ahead and go into the next sector, which is actually going to be consumer discretionary. Now consumer discretionary are basically stocks, and these are primarily brick and mortar type of locations, and these are going to be companies that we're all pretty familiar with that sell goods out of a retail location primarily. So within consumer discretionary, I personally really like Home Depot, so I do have 45% weighed in on Home Depot. Additionally, I have McDonald's, Lowe's, Nike, and Starbucks. Now personally, if we just look at some of these stocks, Lowe's is actually a dividend king, meaning that they've been paying dividends for the last 50 years. Home Depot is another very solid company. Both of these companies basically do the same thing, and they're basically the industry leaders, number 1 and 2 within the home improvement sector. So I do believe in all 5 of these stocks when it comes down to their branding and their growth potential down the road. Now additionally, let's go ahead and jump into the next sector, which is going to be industrials. Now industrials is another safer sector, but the growth potential with the sector is not as high, so that's why I don't have the sector weighed in as much. But this is another great sector to diversify in, because with these industrial companies, these companies are really well established at this point. So some of the companies that I have is Honeywell, Waste Management, General Dynamics, 3M, in Union Pacific. Now all these companies are basically the industry leaders when it comes down to what they do within the sector. So all these companies are very solid companies. So now let's go ahead and jump into the next sector. And if we look here, material and energy, I don't actually weigh too much on because of the growth potential within materials and energy, but I do like to diversify myself again within all 11 sectors. So with material, I do have a couple companies here, including Air Products and Chemicals, Ecolab, Lin, and Nucor. Now all these companies within the material sector are companies that are basically not going to be going anywhere anytime soon. With Nucor, they're basically the largest steel manufacturer. With Lin, they're the largest industrial glass manufacturer. Ecolab makes products for hospital sanitization, so this company is basically uptrending at this point because these are products that we've all been needing and using at this time. And then Air Products and Chemicals basically makes different chemicals and gas supplies. So these are all solid companies that I like within the material sector. And lastly, guys, the last sector is gonna be energy. Now within energy, I have 3 stocks that I currently invest in, which is gonna be Chevron, ExxonMobil, and then Pembina Pipeline Corporation. Now, Chevron and ExxonMobil are basically the top two largest companies when it comes down to energy. ExxonMobil is actually the #1 company, but personally, just because of some of the moves that ExxonMobil's been making, I'm not heavily investing in this company, but I still like ExxonMobil because they actually pay out a solid dividend and they have a lot of cash reserve. So I can see this company diversifying and using their money to diversify their income in other things. And then Chevron is another key player that's actually being innovative when it comes down to oil and gas supplies. So I see these two companies going nowhere anytime soon. And then Pembina Pipeline is actually the largest company when it comes down to industrial pipelines for gas companies, and they're the largest company in Canada, I should say. So this is another solid company that does pay a dividend of 7.25%. But now guys, that is basically going to be everything in my portfolio, and those are going to be all the 67 stocks that I currently have within my portfolio. Now, like I mentioned, I do like to diversify myself within all the 11 sectors within the S&P 500, and I am very excited that I actually got this portfolio up to $25,000. My goal with this portfolio is just going to be to keep investing in this portfolio on a weekly basis, and I follow a strategy called dollar cost averaging, where you basically invest in the stock market on a weekly basis, no matter what happens to the stock market on any given day. And over time, with compound interest, the portfolio should keep rising in value. So if you do want to check out my full portfolio, I will put a link down in the description. And additionally, I do have a private Patreon page. If you're interested in seeing all my buys and sells, basically every time I buy or sell a stock, I do put it in my private Patreon account, and I do have a link for that if you want to sign up for that in my description below as well, guys. So hopefully you guys enjoyed the video. If you have any questions that you want me to answer, make sure to leave them down in the comments below, and let me know if there's any stocks that you personally liked in my portfolio that you're looking to invest in, and if there's stocks that you don't like, or if there's stocks that you maybe recommend that I should add into my portfolio. I am looking to get this portfolio up to about 70 stocks, and I'm looking to grow this portfolio, and my next goal for this portfolio is to get it up to $50,000. But that's going to be a wrap for this video, guys. If you are new to my channel, make sure to subscribe to the channel down below, and make sure to hit that like button. But thank you again, guys. Until next time, see you guys at the next one.